Dividend investing is a great way to make extra cash. If you focus on solid companies that regularly increase their dividends, a small amount can grow to become significant. Before you dive into dividend investing, here is what you need to know. The main reason is that you will gradually become rich. Companies that pay dividends are more stable and mature than those that do not. Although they will not skyrocket suddenly, a portfolio of dividend stocks can build a lot of wealth in the long term. Upcoming companies do not pay dividends. They feel that they should reinvest their profits and grow the business instead. When a company has grown and does not need to reinvest all its earnings, it can pay back capital to shareholders in two ways: share buybacks or dividends. According to investors, no one way is better than the other, and a majority of dividend stocks combine the two. Dividend stocks are mainly profitable, and so they always have a better chance of surviving crashes and recessions better than their non-dividend counterparts. They are also less volatile. Dividend yield is the least important of all the other metrics that major investors should be conversant with. A higher dividend is definitely preferable if all other factors are equal, but if a stock pays a reasonable yield, then you should concentrate more on other factors. Long-term investors consider dividend growth and consistency more important than the current yield of stock. If you decide to invest in dividends, you should be aware of a few important dates. These dates will help you know if and when you will get the next dividend payment of a stock. Trade date: this is the date you bought your stock. Contrary to what you may think, the ownership of the stock is not immediately transferred to you. Settlement date: for stocks, this refers to 3 business days from the trade date. This is when your purchase is finalized, and you are officially a shareholder of the record. Ex-dividend date: this is when a stock first trades without its dividend. You are entitled to a dividend payment if you purchase shares before the ex-dividend date. Record date: this is 2 business days from the ex-dividend date. On this date, the company determines who does and does not get a dividend. Pay date: this is when shareholders are paid dividends. What to do with all your dividend stocks? If you want to invest for the long run, reinvest your dividends so that you can maximize your returns. You do not have to purchase individual stocks to be a smart investor. If you are a new investor, it is wise to start with an ETF that deals specifically with dividend stocks. All the knowledge can be overwhelming to a new investor, so look into the index fund approach. This is a smart way to get into dividend investing safely. Please subscribe to Financier Pro YouTube channel and podcast.